Hey guys.
Hey,
All right, I'm gonna change the picture today, and you're gonna soon understand why at the end of the presentation today. All right. What do you think? Oh, that's copper. I don't want copper. We want gold. All right. And you will soon understand why. Your guys are going to be excited for gold.
okay.
Have I really steered you wrong?
You haven't. You
Right.
haven't.
Right. How is the trading today?
It's going good. I think I might have overtraded a little bit, but it's all right. We still in the positive.
All right, that's good. That's good. So today we get to talk about the fun dark pools of the market. Is Kyle there or Cleveland there too? There you
Yep.
are. I see you peeking in. Awesome. Okay, so today we're going to really talk about the dark pools of the market and really why they are important to know about and to also see if there's a way that you guys can follow them, because these guys have billions, billions of dollars, right? And so this is where Ackman will trade his money, Soros, Ray Dalio, where Warren Buffett's trading his money. They are doing it in the dark pools. And I have the gold background up because gold today, insane in the dark pool. We're going to see where it's going to go, and you guys will likely follow it and will likely profit. Okay. From my live stream, looking at the analysis of gold, it's at a point now where if we are bouncing, there could be roughly on the gold futures a move from 1880 up $700 up to almost 2600, 2595. So there's the potential for insane profits to come. It wouldn't happen necessarily overnight. This might be more of a swing type trade for months to years. But we'll look at it. We'll get into it and we will break it all down so you guys know all about the dark pools and why it's really important. So as always, legal disclaimer that this is for educational purposes. Any ideas or strategies are best paper traded. And once you get into real money, there are varying degrees of risk. And know that no past performance is indicative of future performance. All right, so do you guys believe that the market's manipulated?
Oh, no doubt about it.
What?
No doubt about it. Definitely.
Well, Donald Trump does, and so does Kramer. I've never seen anything played with these stocks like this before. So many games. And Trump, when the so-called rich guys speak negatively about the market, you must always remember that some are betting big against it, and it'll make a lot of money if it goes down. They go positive, get big publicity, and make it going up. They get you both ways, barely legal. Right? That's the president saying this out in a tweet. Well, sure enough, it was April that we started to see that the Fed started to really stimulate the economy with buying.
Buying bonds, right?
Bonds, yeah. Buying bonds, federally secure bonds. And they started saying, all right, well, we're going to buy $250 billion worth, and they can tap into an additional 25 billion from the Treasury Department set aside, blah, blah, blah. Well, what did we see? Sure enough, June 16th, we saw $93 million with these 3 million in bond prints on June 16th. Well, what happened after June? Let's look at the chart, right? Let's look at the SPY as to what happened from June. All right, here we go. June 16th, roughly right here, right? Well, June 16th to today, we're up a nice 22%, right? buying it to keep it up, saying, no, 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 we're not letting this drop. You know, when they actually bought, they bought when the market was pulling back on the 16th. Hey, let's prop it up. Let's go ahead and continue to keep this market up. Well, helps when I'm on the slides.
What is the significance of bonds?
Bonds. Okay. So when you have a there's two different things. You have a stock that people can invest in or bonds. The reason why bonds are important is because this is another way for a company, a municipality like a town or city or the government to raise funds. However, those people do not have an interest, a voting interest in the company or the municipality or the government, in the sense that with that money, they can't make any decisions, right? So they also will receive interest, or what it used to be called was coupons, which is the interest rate now, on those bonds. And it has a set maturity level. So they're able to invest in it, and it's consistent payments like a dividend stock, except for the bonds, you do not have any voting rights, and you can redeem it early if it has that ability. Sorry, I just want to make sure there was no kid issue. So the bonds are a way to invest that's more safe, right? It's a solid payment that you can get back. So a lot of times what will happen, it's directly correlated with the interest rate by the Fed, so that if someone had issued bonds 5 years ago and the interest is, say, at 5%, right? And in 10 years, they're going to receive all of their money back. Does that make sense? So now we're halfway through the maturity of the bond. Well, now interest rates are much lower, right? They're at 0.25% for the Fed rate. And that one's up here at 5%. So now it becomes more interesting, and the price for that would go up because you would be able to get more money because the interest rate of the old bond is higher than the current interest rate. Does that make sense? So the amount of payment that you would be receiving, but you only have 5 years left of it. So it's another investment tool that you can use. And you also have to think of it this way. If they're buying back their federally backed securities, that means that they don't want to pay interest anymore.
Right.
It's kind of like when you buy a call and you exercise it, right? You are calling that stock back from the person that wrote that call. Does that make sense?
Right.
Because it's a contract. So a bond in a way is kind of like a contract. It's a contract between the person that's giving them the money. Buying the bond means you're giving them the money, and they pay you back interest payments. So what the government is saying is, we don't want to really pay those interest payments anymore. We want to get that off of our books. We are going to buy the bonds back. And then it also limits the number of bonds out there, which also increase their value. Less supply, higher price. Good?
Sure.
All right. So just recently, October 15th of this year, the Fed says, all right, well, we're going to be buying $60 billion worth. So originally it was the 250, and now they've increased it. They went through their 6 months from May. So May, June, July, August, September, October. And now they've expired that 250 million, the billion, excuse me, that they were going to be buying. So they went in and they said, you know what? We're going to stimulate the economy more by buying back more federally backed securities, because that's pretty much the only tool that they have left besides printing money for stimulus. They can't drop interest rates anymore. They can't pay banks any more money for having money in their accounts. So they can only buy back more federally backed securities. Did you have a question?
Now tell me something about a stock.
Okay. And then, so with the federally backed securities, this is propping up the market. And the big thing is, we see these headlines And then we see October 21st. Yep, 1.6 million. October 22nd, almost a million. October 28th, 694,000. 1.1 million on November 4th. So we're starting to see all of this come into it. So really, what does that mean, right? Well, the dark pools are where the really big guys go for liquidity. They want to place a big, massive trade. Then they go to the dark pools. If you wanted to buy millions of shares, are you going to put that on the level 2 so everybody can see it?
I would think that you would because you want everybody else to buy so it can go up.
But if you put it on the level 2, do you think that anybody else is going to let it get down there? Or do you think people are going to jump in ahead of you and say, somebody wants to buy here, so I'm going to jump in because I know it's support?
Right.
Right? If you're long a stock and you see a big seller say at $20.50, are you going to wait for it to get to $20.50 or maybe get out just before that point? Because you know that there's somebody right there, so maybe you get out just a little bit earlier. Right? Same thing on the bottom. If you wanted to buy millions, it likely would not go there, so they hide the order. Right? They're keeping it out of the public eye. And they used to do it before the dark pools were established in the 1980s by buying blocks just at the volume weighted average price throughout the day. So it would take multiple days for it to actually be filled. Now they're able to do it in the dark pool, and it happens pretty much once their order is completed. They will issue out that print or the receipt 3 hours later. They have up to 3 hours later to print it out. So who are the people that trade in it? Like I said before, Warren Buffett, Ray Dalio, Bill Ackman, the people that have billions of dollars that are able to control the market are the ones that trade in this market. Now, if you have ever hidden a trade or you on Thinkorswim, I think you can do it on Thinkorswim, where you can say show the number of shares. Let me just see over here where it says hide your shares, right? How many shares do you want to show? 1, 2, 5, 10. When you see that on the level 2, for example, I have a picture earlier today. Let's pull this down here. I have a picture earlier today that I posted of level 2 where I was watching SPI, and you'll be able to see that they have. Is there really somebody selling just 1 share or 2 shares or 9 shares? That's not realistic. That's a hidden trade, right? It's like a little iceberg. It's just the tip of everything that they're trying to sell. And you'll see, all right, it'll refresh. Sometimes it will flash as well. It'll show the full position and then it comes back and it just shows 1. And you'll see sometimes ADF. If you are watching and you see ADF or FADF, that's the dark pool exchange. All right. Can you see it?
Yeah.
Okay. So the dark pool exists when we have the big whales of the market, like that website Whale Wisdom. Those are where the hedge funds trade, right? So those are the big whales with all the money pooled together, and they want to place a massive trade. Well, there's always lots of little retail traders. These are the guppies. All right, well, Kramer said we should go out and we should buy Bitcoin today. So let's go buy Bitcoin. Maybe there's a big whale that wants to sell it at 20 million, or excuse me, at 20,000. And maybe that's Jim Cramer, but he can say, everybody go buy Bitcoin to create the demand to buy it, right? If he wants to unload a lot, he needs to have demand. You have to always have somebody on the other side of the trade. So if you want people to buy lots of shares at the top, say back in January or February, we saw headlines from Barron's and they were saying, oh, where is the market going to go from here? Right? Where could it possibly go? Hold on, let's see. This is the headline from January 20th. Barron's, Dow going to 30,000. When did it hit 30,000? Right now, today. 10 months later, it actually hit there. And it says, what could possibly go wrong? So when they start to sound overly enthusiastic on the market, many times that could be a caution warning sign. Hey, you might want to think about trimming your positions, longer term positions, because maybe there's a correction that is getting ready to set up. So we always have the little traders and the big trade or big trader that's got their position hidden. So why is all of it important, right? We want to see where they are laying their trades, right? Don't you want to know if there's 50 million share position being traded somewhere? Would you guys want to know that?
Yeah.
Yeah. And so it's pretty easy if we go above that print, which is the receipt, right? Because only once it is completed, it's the confirmation, it's the receipt, it's the level 2 print, like that image that I showed you of this one right here. This is a trade in the dark pool that has already happened. It's already happened on the time and sales. So this was 10,100 shares that traded in one order. They could choose as well to potentially split it up into different trades, or maybe they have, 500,000 share print. There might be something to do with numerology as well in the trades. So looking at this, we can say, all right, so there's this price level, 1368. That's going to be important to watch. That's the largest block trade that was traded, and it's something to pay attention to. You can watch level 2 and see them go by, and it's a matter of watching it intensely to see if there's a big block trade that comes through. All right. So here we have the bottom way back in December 2018, and the top February 2020, end of January, right? And I showed you that headline. That headline came out January 20th. Right here as we're hitting that top. Hey, the Dow Jones is going to 30,000. Well, what did we see back in December of 2018? December 24th, Christmas Eve. They don't think anybody's sitting in front of their computers who are watching. And all of a sudden, well, we saw 12.2 million down at 239. It came in all day long, but they were buying. How do I know they were buying? How do you think I know they were buying?
ADF.
Sorry?
ADF.
Well, no, but how do you think I know it was buying? Not because of ADF. ADF is simply the exchange that it went through, the dark pool exchange.
How do we know that they were buying? Yeah, I don't know. I thought for the dark pool you can see the print, but you don't know if they're buying or selling.
Right, but we know after the fact. A couple days later, we're able to tell.
Okay.
December 26th, another 26.9 million. So we're looking at roughly 30 million, right? And it just continued up. It surged up to the upside. Now we're coming back into the beginning of January. We're up here. End of January, correction. 17th of January, 21 million shares. 20th, 18.3. 21st, another 11 million. We're looking at roughly 49 million shares of the SPY, end of January, as that headline. And then what are they doing with the headlines? Yeah, what could go wrong? What could go wrong with the market? This is January 20th, and the 20th, hey, let's just happen to place all of these trades, 18 million, 11 million. They want to convince people that it's time to get in. It's at a high. Why wouldn't you get into the market now? Everything is going great. The market is strong. Well, then that's a $16.9 billion position. It drops, right? We know that it drops. And then it rebounds again into February. Well, February 27th and 28th, we have 55 million and 20 million. 20 million came first. The next day, 55 million shares, right? Well, here was back in 2018, came down to this trend line and bounced. This is a weekly chart. So first we had the prints here where the blue line is for January, the 40 million or so. And then we have the additional 20 million. And then on the 28th, another 55 million. Boom, comes all the way down. Right? So they can be very influential and paint the picture of what's going to happen. Where are we going to go, especially on the indexes when we start to see major prints on the indexes? So what happened on the 17th of March? St. Patrick's Day. I had a car accident that day. Not 2020, but 8 years ago. Well, we saw massive prints coming in. 239, 239, 239, 252, all day long. When we start to see prints all day long, we know that there's going to be a big, crazy move that is going to happen. And we know what happened, right? What happened from March? March 17th, we saw all those prints. As soon as we went above, they were done. Did it look back really? No, they came back. Maybe they were greedy. They wanted to get some more. And now, all the way back up to today. So it's very important if you're in something longer term to know, hey, what is happening? What's going on with the price action? Are there any major prints on these stocks? Is this something that I really need to pay attention to? Well, the next one, you guys have heard me talking about it, right? Apple. We had over 35 million in prints starting back October 6th. So they were slowly adding October 6th, 113, 116, 117, 118. It was happening the entire time until 2 days ago. And what happened? We finally broke 117. So all of this time, right now, we would say that it was selling because they're above us. Maybe there's going to be further news coming out. Maybe Biden's going to stop production in China or stop Apple from selling in China. I have no idea what is going to happen. But I know, sorry?
We expect it to drop more?
This very well could drop lower. Right now, it was overextended, and then we had a drop. It's tested this trend line, right? And now it bounced back up. Here's the thing that was really interesting. Apple is 10% of NASDAQ and roughly 8% of the SPY. Apple was dropping and pulling back hard. However, the indexes didn't have the same action.
Right.
They were still moving up. So sorry?
What is the algorithm doing?
What was the algorithms? We'll look at it. Let me pull it up. Let me close it on the other computer and I'll open it up over here. It's cool, all the little tools, huh? To see exactly see where the big money is moving. All right, it's opening up.
Do the algorithms follow the big money, or is that like more like the moving average?
No, the algorithms are the computers buying or selling. And a lot of times those algorithms that they're tracking are big money, dark pool money.
So,
All right. So right now, I'm just waiting for it to load. I'll bring it up over here. Let's put Apple. So I've got it on a 15-minute chart. 15-minute chart is going to be better for swing trading or that bigger picture of where it might be going, whereas a 1-minute chart is going to show you scalping. What's it just doing intraday, right? And this right here is where the dark pool prints are. So yesterday we had a bunch right here. And then today we have some too, up at 33.63.11. What's happening for Apple? Well, if we back this up, look at how long they were selling in Apple, right? This goes back to 11.4. It'll only go back really 2 weeks on the 15-minute chart because there's so much data. But you can see this entire time they've been selling. Well, now all of a sudden, coincidentally, we happen to hit, let me take this, put it right here. We happen to hit that trend line, right? These trend lines are pretty cool in that we hit it. And what happened to the algorithm? It started buying right as it hit that trend line. I was calling out, hey, watch the 1250 area. 1259 was the low of the day. Now we're bouncing and we're coming up. The SPY is bouncing too. Let's put the Qs up. They've been buying on NASDAQ ever since the 15th, roughly. So looking at it longer term, we can say, all right, without this information, this is like an extra cherry on top of the sundae, right? First of all, learning about the dark pool and seeing that these prints are telling us where they're putting their money is pretty amazing. We had a lot today as well. A lot of prints coming in. Yeah. Another one to watch. Let me pull it up over here. Pull this up. So I was doing IAU, which we'll look at. But if we look at PayPal. So PayPal today, we had roughly 1 million on PayPal. That's pretty impressive. But you don't have to have this software to be able to see it. You can also look right over here and you look at the blocks. Okay, well, let's sort it by the largest blocks recently. Okay, SPDW, gold, SPTL, SPEU, VIX. And then the yes would be, hey, is this in the dark pool or not? So the dark pool, again, is where it's hidden, right? These would be, this is one that you will see that it's not hidden. They could have that position on, and then slowly but surely it gets hit. So let's look at the gold chart. That was 22.91. Oops, excuse me. That's the futures. We want to look at this one, Barrick Gold. So 22.91. And when we look at it side by side, put on a 5-minute chart. Here's the print, right? Does it mean that necessarily this is when it happened? No. It just means that this is when they chose to show their card, that this is when the trade happened. It could happen, this was 305, right? Oops. Another way to look at it. So 2.3 million, this was at 308. Well, this could have happened anywhere between 1208 and that time. They might have finished, maybe they wanted to buy. And so they were waiting until it came back down. And then finally they finished buying all of their shares. And now they're ready for it to move. When we see a lot of prints in one day, it doesn't mean trade that day. Sometimes they're not done, right? Like those Apple prints. Apple was setting up for a number of days, and it's not something that will happen instantaneously. How long did you guys hear me talking about Apple? Watch Apple, watch Apple, watch Apple. And then once finally that 117 was broken, it had a nice $4.50 move, right? Watch it for when it breaks 117. Watch it for when it breaks 117. All right, it broke 117. Boom. Quick move, nice profits. And you know that you have 35 million, you have roughly $3 billion above you. So are they done? Are they only looking for $4.50 move on Apple? With 35 million shares, I don't believe so. We didn't see any more prints today. When we look at Apple, 100,000, but that's really not much. It's going to take a little bit of time because there's a lot of prints to search. But look, okay, we ignore the closing and ignore the open. So this is sorted by price, excuse me, by share size. So 750,000 at 118. They kept adding and adding and adding. And when it's finally done, that's when the major move is going to happen. So when we go back to the slides, it bounced. Maybe there's a computer set up to buy on this trend line, right? And they bought. We didn't see that much, maybe 100,000 that was bought today. So that's why, whoops, my thoughts are we're still below this. We're still below that 117. There's still potential move to the downside. Right now, they might be trying to suck everybody in with the markets and everything moving to the upside. So IAU, you guys saw in gold that we had 2.3 million. This is IAU, all of the prints. And this is what we'll see some days. Some days it will be non-stop. This is everything greater than 25,000 shares. And you see the NQNX? That's the dark pool as well as NTRF. And when we see intermarket sweep, that means they went to all of the different exchanges to grab their shares. They just wanted it. Now, whether they were buying or selling, I don't know yet. But there's potentially a gold rush that will happen for gold stocks and for physical gold. So things like rings and jewelry, bracelets, all of that could be good because the US dollar, as we mentioned, with them putting all that money out there. Yeah. So that's why it seems like the money is flowing into gold and also Bitcoin. A lot of people are turning to Bitcoin as a potential resource. You have a question?
Is GBTC or is it GBC?
It's GBTC.
Okay, so like, how does that correlate with Bitcoin?
Okay, so there's GBTC, and this is a trust. So what happens is that means, nice, I took profit today. I'm happy to see it drop. That GBTC owns Bitcoin, right? So like when you have ETFs that own oil contracts, like USO, you don't actually own the Bitcoin yourself, but it's the underlying asset that it trades around. So it will trade in correlation to Bitcoin, much like ETHE, which is still going up. And this one is based on the price of Ethereum. So this one, you heard me talking about this on my Sundays. I got in down here at 58, took 100% profit. Almost went to 100%, almost up to 116. But I said, hey, look, this is starting to curl up. It's just breaking this trend line. And we broke this trend line already. This has the potential to move just like Bitcoin. It's another altcoin. Bitcoin, Ethereum, Litecoin, and Ripple are usually the top 4 that people actively trade and that could be used as an altcoin for exchanging as a cryptocurrency that's widely accepted. So Bitcoin is already being accepted a lot at a lot of online retailers. And you can actually exchange Bitcoin for gold in Europe, where you buy Bitcoin and then you say, you know what, I want to exchange this for gold, and they will actually ship you the real gold. Did you have another question about Bitcoin other than, or GBTC, other than how it's related to Bitcoin?
Right now, but I've been hearing a lot about XRP. I don't know if you
That's Ripple technology. So Ripple technology already exists, and there's the Ripple coin. So Ripple in itself is the technology of basically sending wires and sending money electronically, such as money going through PayPal or Venmo. It's already a technology that's being used. And will that coin turn into one that's being used? I don't know that it's necessarily going to turn into a crypto that everyone is going to use, but the technology itself is useful. Does that make sense?
Yep.
So, because it tends to be a crypto that is cost less. Let's look at it on Binance.
It's one question I need to ask you about it. They got dark pool prints.
Sorry, what dark pool prints?
ETN. Do they have they had any dark pool prints anytime recently?
Well, I'd have to go back and look at it daily like this. Eaton, this is the 29th. Let's look at the 24th. Today, small, closing. We had some, that's closing prints. That was a late closing print here. I feel like the name had, here we go. No, still closing. So closing, remember, if somebody is trading, day trading, and they work at an institution or they work at a prop firm and they're trading with a lot of money, they will many times close out their position, just put a market on close order where they actually have to close it out because they're not allowed to hold it overnight. So market on close prints, the 4 o'clock prints, we don't usually pay attention to. But you can see, even in looking at it, that this day had higher amount, right? It's 346. So this price of 114.45 was important because it's higher. Do you see how the closing prices have been 179, 200? That was the highest that it was traded. They have small prints, but nothing super crazy like million share prints.
All right.
So when we look at gold, right? Here's Rheingold. Well, let's put it back to today. So we have current information, 2.3 million. So when you are looking at this information, all right, Rheingold, 2.3 million at 22.91, right? We set that over here, 22.91. Oops. Also on IAU. We've had over 23 million today. Look at where it is. Now it's starting to actually almost go above 17.23. Look at that. 13 million block trade today. Hey, Google, what's 13 million times $17.22?
The answer is 223.86 million United States dollars.
$223 million in one trade. Right? So somebody knows something.
Do you have IAU?
This is IAU.
Do you have that?
I don't have it now. I was in gold. I traded dust. So as you become more experienced, right? You don't ever want to hold leveraged ETFs or ETNs. They're not set up as an instrument to hold long term.
Okay.
However, you see that gold came down today. Well, dust shot up. I traded dust yesterday down here and I wrote it up. And then once it hit the bottom, I got out. I saw it hitting a Camarilla for the futures, for gold futures. And I said, I'm getting out, right? Because I see that volume is coming in, support is coming in. I'm going to get out. I'm going to take my profit. I did not hit the absolute high. I took it out here at 22.71. I was done. I didn't need to worry about it the rest of the day. Okay, if it goes up a little bit more, fine. But I saw, this is what I saw on the gold futures. So if you're trading a gold stock, you want to see what's happening with the futures, right? What is the pattern? I'm starting to quiz you guys now. Oh, let's move this up right here. What do we have? What's this? Do you remember the patterns?
I don't see it.
What's the pattern right here?
Pin it?
Descending triangle. Because you
Okay.
have the flat bottom and you have the angled top.
All right.
So we have a descending triangle. It was a matter of patience. It broke down, right?
Yeah.
As soon as it broke down, it came to that next level. Whoops, I'm on the wrong tool. It broke down to support down here. This was a resistance level, then it flipped to be support. Well, guess what? It's support again. All of that buying that we saw, also this is the 200 SMA. Make it a little bit narrower. So that's the 200, actually 200 exponential moving average. And look at how it respected that. It bounced right off of that, as well as the support and resistance from the past. Now we're seeing all of the prints come in. These are the futures. So this is where looking at the futures in relation to looking at a stock can make a big difference. Look at how here's our 200 exponential on IAU, the gold shares. So this again is an instrument where you can trade gold, the valuation of gold, with the ETF, right? So this is 100% based on the price of gold. So you could.
There's no gold stocks though.
Yeah, there are. There's Ego. Ego is one of them. That's a lower cost one. We also have GDX. That is the gold miners. So that would be in relation to if you were to trade Nugget. Nugget is 3 times the velocity of this. There's also GLD.
Are all of these ETFs?
No, not all of them. NEM is Newmont. That's a gold corporation. So you would just want to check out the gold sector potentially. If we start to move up, there's a lot of money. That means that was buying, right? You see the gold right here has dropped down. Okay, well, if we happen to come, we look at it on the really big picture. Oh, wrong one. If we look at it, pull it back on the really big picture, right? Well, it had to move up, pulled back, set a base for us right down here at $1,040. We have a rounded bottom. And potentially we have a handle on the monthly chart. So if we measure the depth from here, call it right here to 1900, come down here, come here. Doesn't want to go to 1900 there. We have roughly $800. If it breaks out from that handle, potential $800 move to the upside over here. So then a potential target would be up here. $800, $2,700, $2,600 area. So that's why watching gold right now is going to be important. Because there's money either leaving gold or it's pouring into gold. Biden says he wants to potentially increase taxes, but also stimulate the economy with a massive stimulus, right? That would drop the US dollar. Yeah, go ahead.
It's the one that what's the Berkshire dude name?
Berkshire Hathaway?
Yeah.
Warren Buffett?
Yeah. Do you remember he was buying gold a while back? Is that the same as the same type of gold? I mean he was buying like Barrick Gold.
Yeah, Barrick Gold is GOLD.
Is that one of the one that will be in this category?
Yeah, Barrick Gold, we saw prints today. We saw 2.3 million. That could be Buffett right there. That could be Buffett's trade coming out and saying, hey, I'm buying gold. Let's go here. Let's actually look at Whale Wisdom as well. And let's look at GOLD. Can tell you who's been buying. Here we go, Barrick Gold. All right, and who has been adding? Bank of Nova Scotia, a lot of banks are buying it. Allegheny, Platinum Investment, Jane Street.
They doing options on it?
Sorry? Yeah, you can do options. This will also show you if, yeah, of course you could do options. So in setting up for a potential move, you might look at it and say, okay, this is a monthly chart, right? Let's back it out to a daily chart. So how long did it take for it to gain? I wouldn't look at the drop because the drop is always faster, right? People always sell and have panic and fear more quickly than going up. And we also know from looking at the fear indicator with the VIX, right? When prices are dropping, options tend to increase when they're going down. Fact of life, right? So if we look and we say, all right, well, how long did it take for it to go and move 81%? Buffett was buying 81% move, not bad, right? It took roughly 31 trading days, 46 actual time days for that to happen. So if we were to anticipate another potential 70% move, 70% move, and we go out 46 days. So maybe you're looking at 38.50 in the new year, January. mid-January.
I'm looking at some January.
Here, let me
January
move this
23rd.
over. So we go here and we say another 70%, just to be, we'll throw a number out there, right? So 70%, and we go out 46 days,
46.
46 or 31 trading days. I said 31 trading days, right? Was 45 days. So January 8th, potentially 38.50 calls. Let's write it down. Paper trade it, right? Now we can look, maybe let's see if we can look right here because I don't have my other system open. Let's go to analytics options. Let's just click here to open a new window. And we are on gold, right? So let's look at options. All right, December, let's go January 15th is what we can look at. January 15th, they don't have 38s, they have 40s, or they have 37s. So the 40s have had 14,000 open interest. The biggest volume has been right here, right? Closer, 26. Right now it's trading at 22. That's a $4 move. So how much of $4 move for December? Do we really think that it could go $4? Of course. If it's buying with billions of dollars, it's going to potentially have that. You could potentially go back here and look. Let's see, pull up that window again. If you were to put in 50 bucks, or you buy 10, right? You buy 10 at the $40 mark. Even you could come in closer, 35 right here. It'd roughly be $5 each. You're giving yourself time for that move to happen.
These calls are kind of cheap, so.
Yes, but remember, those calls are cheap. However, if there's going to be a massive move, what's going to happen to the price?
You want to get it farther out of the money.
Yes, because you know it's going to grow exponentially, right?
Right.
That delta is going to continue to grow as it grows. So you don't have to spend a lot. You can
Right.
put in low risk, and in return, look at where this is trading, $1. So if you have 35, that's $13 away, and it's going to scream higher. We squeeze the shorts, then it could potentially turn into 50 cents, 60 cents. You're looking at 10 times your money, right? So now you can see the power of following those dark pool prints, that you see it and you know, all right, well, let's look at Apple, right? Apple has all those prints too, right? So let's look at that option chain for Apple. Well, maybe we want to go out, say 4 weeks. We know that we've had a lot, 35 million. So we go 1, 2, 3, 4. That brings us to the middle of the month. And we'll look at the puts. All right. Well, let's look and see where we have open interest. There's a lot of puts at $105, $100, $90, $97.50 has 45,000, 20 cents. Well, what happens if it goes right to the money, right? Right here. Well, you go from 20 cents to 300, 15 times your money. So that's where following the prints and seeing, okay, it seems like the direction for Apple right now is lower, right? So if you were to buy 4 at $20, then you've spent $80, correct?
Right.
When it gets to $40, you sell 2. Guess what? Those 2 are now free, right? No risk, because you've taken off the cost. So as long as you're buying a multiple of 2, when you get to 100% gains, you just sell half of it. whatever the move happens, no matter what, as long as you have time, great. You have the potential to take that money and create it 15 times over. Are you buying options right now?
I just did.
Which ones?
I got one for gold on January 21st.
For gold?
Yeah.
Which ones? The 3850s?
I got the $35 call.
35 calls for gold
Yeah.
on the 21st?
Of January.
That's some time. You don't think it's going to happen very quickly, huh?
No, I just
Now,
want to give it some time, you know.
that's right. No, buying time is always good. Now, also, when we look at equity clock, right? What happens to gold in general during these months? Because that can make a difference. Commodities. So platinum, wheat, copper, silver. Come on, gold. Show me the gold. Gold futures. All right. So when we look at the gold futures, this is what I need to do so I can draw on it. If I do this, I can draw on it for you guys. So here we are, third week of November. What tends to happen? Whoop. We go from maybe 7.8% to maybe 9.5%, right? It tends to gain. So don't be surprised if beginning of December, you see it shoot up and then it pulls back down, right? Because on average, for the past 20 years, it will go up from where we are now, have a nice move, and then come almost all the way back down. Why? Well, look, they tend to be adding, it looks like. It tends to have that nice upward trend and then go up, and look at what we have from middle of December all the way until March. So maybe when you start to get profit, you roll that out in time to the end of February.
It's up $100 already.
Yeah? All right. You guys are buying me a nice Christmas present then. So looking at it, right? If you see the power of the dark pool, it's easy because you go for those low risk where you don't have to put in a lot of money, but it can grow exponentially. And that's the edge that can help on top of knowing how to trade, on top of day trading. You can see, hey, this has that perfect opportunity to grow exponentially, whether you're holding stock, even if you guys want to buy your girlfriends or wives gold for Christmas, you see that that valuation in the next couple of months to 18 months could turn into a higher value. You'll be getting it at that Black Friday sale this week, but it might not be at that price for very long. And it could grow, 50% in value over the next 18 months. And it's always good as well to have cash on hand. What happens if all the banks go down and there's no electronic currency? How are you guys going to live? Do you have cash? Do you have food?
Gotta go under the mattress.
Yeah, but you gotta think also at the same time, prepare, set up a little stash of some cash, right? Where you have cash on hand, where you're set up with food rations in case everything goes crazy. The stores shut down. I'm not saying like fill your basement with food, but just think about the what ifs at the same time. It's risk management for your life as well as in trading. All right. All right, guys, that is it for today. Do you like it?
Yeah, it's good. I'm gonna get a lot of those gold contracts for myself tomorrow. Though it's too late now.
But also remember, we don't know 100% yet. We don't know 100% if it's going up.
The gold?
Right. It's speculation at this point that they were buying because of it bouncing today. So don't go and bet your house on it. And next thing you know, it starts dropping. Right?
Guys,
You got to be careful because all we know is that there's a lot of either money going in or going out. We
right,
don't know that it's definitely going in.
right.
That's speculation, looking at the chart that, hey, it tends to be at a low. They tend to buy here. It tends to go up, but it's not guaranteed until we see that price action follow.
But I heard that Warren Buffett was buying gold,
Yeah.
buying Barrick gold.
Yes, yes. But he also had the airlines and he took a major loss on them and he sold them and now it's back up 50%. So even though he's a great billionaire trader, you also want to make the educated decision based on the price action of the chart instead of just the chatter of what somebody else is doing. Right? All right, guys. I hope they go up 5 times between now and Friday. And you guys have a great one. All right.
All right, you too. Have a good
All
one.
right. I'll send you the videos as well. All right. See you guys on Friday.
All right, later.
All right. Bye.